What's up, trading bros and sisters? Welcome back to the weekly review. I'm Wildcard, Saturday edition, no alarm clock, no pre-market, just the recap. TB's here with me. And if you were watching this market all week, you already know what the theme was. The market picked a lane this week. Not tech broadly. Not growth. Not value. Chips. Specifically, relentlessly, aggressively chips. We are calling this one the Semiconductor Republic, and we are going to break down every corner of it.
Quick reminder before we get into it, nothing we say today is financial advice. We're two retail traders talking about what our systems did and what the market did to us. You run your own risk, you size your own positions, and you make your own calls.
And on a week like this one, you definitely want to be making your own calls. Because the calls that paid off were not the ones anybody predicted on Monday morning.
The numbers set the table. The NASDAQ 100 finished the week up 2.4%. The Dow Jones Industrial Average finished down 0.25%. That spread, 2.5 points between the tech-heavy index and the blue chip index in 1 week. That's not noise. That's a two-speed market running at full speed in opposite directions.
Gold faded. Small caps barely moved. The Dow bled. And the entire rally was 5 to 7 semiconductor names, dragging the whole index upward while everything else just sat there and watched. That's the Semiconductor Republic. Let's dig into it.
This streaked first. The Philadelphia Semiconductor Index printed 17 consecutive green days going into Friday close. 17. The SMH Exchange Traded Fund is up 30% in a single month. Not a quarter, a month.
NVDA broke to its first record close since October and crossed $5 trillion in market cap. Let that sit. $5 trillion. And AMD. Oh man. AMD ran up 23.95% in 1 week with zero company-specific news. No earnings beat, no product announcement, no buyback, no surprise deal. Just AMD, moving like something was on fire.
The sympathy trade. When NVIDIA runs, the whole sector lifts. AMD caught the updraft on the semiconductor narrative.
Your boy could have just bought AMD on Monday and gone back to sleep. But that's not a system, that's a lottery ticket. So let me tell you what two actual systems did instead, because the real story is more interesting.
Wave trader first. The headline position this week was WOLF, Wolfspeed, silicon carbide power semiconductors. The system exited 7 times across the week and banked $3,041. Clean exits, scaled out progressively as it ran. That is the hardware as utility thesis in a single position, the physical layer that AI infrastructure actually runs on. The system caught it, managed it correctly, and banked it. WOLF is the system working exactly the way it's supposed to.
And then on the same thesis,
AOSL is a different outcome. Right thesis, wrong ticker. The model was positioned in that same compound power chip space, but AOSL didn't move the way the data predicted. That one gave back gains. Then RMBS topped out hard at negative $2,378. 3 positions, 3 completely different outcomes. WOLF is proof of concept. AOSL is tuition. RMBS is a hit the system took. They are not the same story.
which is important to say out loud, because it's easy to blur them into one narrative about semis. They're not one narrative. My TFT system caught ASML at entry this week. Up $124 by Friday, not a blowout, but the system got positioned in the right name before it moved. Not every week is a $3,000 week. Sometimes you're just building position in the right direction.
The Goldman data from midweek is what I keep coming back to. Pension funds were net sellers into this rally. CTA funds, trend, following algorithmic money, were net buyers. That divide matters. Pension funds are the slow institutional floor money. CTA funds are momentum chasers. The people who are supposed to be anchoring this rally were getting out. The people writing the trend were buying in.
There's no institutional floor under 17 green days. It's trend followers holding the bag on a run that the real money is quietly exiting. That's not a foundation. That's a game of hot potato. And the music sounds great right now, but somebody's going to be holding when it stops.
17 green days. And nobody can name the institutional buyer that's supposed to be there when the trend reverses.
That's the Semiconductor Republic. Built fast, runs hot, no constitution. Let's talk about where the money is actually going, because Google just wrote the biggest check in AI history, and it tells you everything.
$40 billion into Anthropic as their valuation keeps climbing. Largest single AI investment ever recorded.
And what does Anthropic need with $40 billion? They need chips. And what do chips need? Power. And what does power need right now, with every data center in the country running hot? Nuclear.
X Energy went public this week and opened up 27% on its IPO. The market finally has a direct instrument for the nuclear AI power thesis, a way to bet on AI infrastructure without taking a software multiple.
WaveTrader was already there.
Lightbridge, LTBR, nuclear energy play. The model entered before X Energy IPO'd. Hit target 1 and target 2, took partials, still holding 357 shares. The market validated the exact same thesis with a $1 billion IPO the same week the system was already positioned.
15 seconds. Plant the flag, move on. Because the bigger point is the pattern.
Every dollar going into AI eventually becomes a chip order or a power contract. The capital is finding its way to the physical layer. Google's check goes to Anthropic. Anthropic runs models on chips, chips run on power, power comes from nuclear. That's the chain. Software names are getting compressed because the market figured out the chain doesn't end at the software layer.
Oracle is a perfect example of the other side of this. They're drowning in AI-related debt. They're building data centers as fast as they can borrow money to build them, and the debt load is visible on the balance sheet. Even the infrastructure builders are leveraged to the ceiling. When the companies constructing AI data centers can barely service the loans from building them, that tells you something about how expensive the physics of this thing actually is.
The market is paying for physics, not code. That's the week's re-rating in one sentence.
Okay. Segment 3. And this one gets uncomfortable, because this is where we have to talk about what happens when honesty is punished.
Meta announced 14,000 job cuts. Microsoft announced 8,000 buyouts. Same week. Both report earnings on Tuesday, April 28th.
22,000 jobs. And both stocks went up on the news. The market rewarded the cuts immediately. Didn't wait for earnings confirmation, didn't wait to see if the savings are real, saw the efficiency headline, bid the stock.
ServiceNow reported the week before. They beat on earnings. The stock got sold. The reason? Management was honest on the call about Middle East deal risk slowing their pipeline. One honest answer about geopolitical exposure to revenue, and the stock got hit.
So the incentive that the market created this week, and I want to say this clearly because it matters, is front run with layoff headlines before your call, manage the narrative, and never give an honest answer about risk. Because ServiceNow gave an honest answer and got punished for it. Meta and Microsoft gave no honest answers and got rewarded for the layoff theater. Every chief financial officer on the planet learned that lesson this week. Lie early, lie confidently, let the stock go up, and deal with reality next quarter.
The market built that incentive. It's structural, not accidental.
Which is exactly the environment you're making your calls in right now. Keep that in mind.
The NOW stop tells the rest of that story in numbers. 2 weeks ago, my stop on ServiceNow was $68.28. On Thursday, it moved to $70.91. Today, Friday, it ratcheted to $73.53. 3 titans in 3 weeks. 176 shares.
The algorithm is walking toward the door.
The system doesn't care about the thesis on ServiceNow. It cares about the price. And the price after an earnings beat that got punished says the tape disagrees with the fundamentals. 3 consecutive stop tightenings is the system getting progressively less patient. If Meta and Microsoft report Tuesday and trigger a software sell-off, the stop catches it. And the system will have been smarter than the thesis.
Which is what systems are for. Not to be right about a company. To exit before you give back everything you made, being right. Okay, the rate picture. Because this is the 12-month backdrop, that all of this plays inside.
The DOJ dropped the Powell probe this week. Kevin Warsh's path to the Fed chair is now cleared. Bond markets reacted. Treasuries gained on the news. When bond traders bid treasuries up because of a Fed chair transition, that means they think the incoming chair is credible on inflation. The bond market calling Warsh credible is meaningful.
And then Trump demanded rate cuts in the same week, which creates a tension that does not resolve easily.
PCE is at 3%. Oil ran to $100 during the week before pulling back to 94. You cannot cut rates into oil at 94 with PCE at 3? The math doesn't work. Warsh knows it. The bond market knows it. And if Trump keeps demanding cuts publicly, that's the 12-month tension that every rate-sensitive trade in your book has to account for.
All right, segment 4. And this one matters most for your Monday morning positioning, so lock in.
Two events. Opposite directions. Both happening over the weekend with markets closed.
Coin 1. Kushner and Witkoff are in Pakistan today, Saturday, for Iran talks. De-escalation. If those talks produce something real, oil pulls back. Risk on assets get a bid Monday morning. The peace optimism that took oil from 100 down to 94 this week was built on the expectation that this trip matters.
Coin 2. The Lebanon ceasefire expires Sunday morning. Markets are closed Sunday. You don't find out what it means until Monday open. If it holds, carry on. If it doesn't hold, the geopolitical risk premium re-enters every commodity and equity at the open.
And here's the thing about VIX sitting at 18.71 while this is happening. 18.71 is not a scared number. That's a number that says everything is fine. The Semiconductor Republic is printing all-time highs. The fear gauge is low, and the ceasefire expires in approximately 36 hours. WSJ ran a feature story this week headlined, "No Peace Plan." No problem. That headline is either prescient or deeply ironic, depending on what Sunday looks like.
Strait of Hormuz is still closed. No timeline on resolution. Oil at $94 is the peace optimism price. That's not the base price. That's the discounted price that assumes the Pakistan talks succeed and Lebanon holds. If neither of those happens, 94 doesn't hold Monday.
So what do you watch? Here's the list. Sunday night, Lebanon status. Did the ceasefire hold or did it break? That's your first data point before Monday open. Number 2, oil. Monday morning, first print tells you what the weekend produced. Number 3 and 4, Meta and Microsoft earnings. Tuesday, April 28th. Those are the two biggest remaining narrative setters of the week. Do they confirm the software sell-off continues, or do they break the pattern? And number 5, does ServiceNow survive the week, or does the stock catch it? 3 titans means the system is nearly out of patience.
If Meta and Microsoft both disappoint and the tape punishes them the way it punished ServiceNow, that's the signal that the software sell-off is structural, not a one-name story. If they beat and the stocks run, the honesty tax was an exception and the market re-rates back. Tuesday is the answer.
Look, nothing we said today is financial advice. Do your own research, size your own risk, and don't blame us when the ceasefire breaks. That's always been the deal.
17 green days in a row, and nobody can tell you what happens on day 18. That should tell you something. The streak is real. The foundation is not.
The Semiconductor Republic doesn't have a constitution. Republics without constitutions don't last forever, but they can run a long time before anybody notices. So, respect the trend, watch the exits, and keep your stops tight. The Republic runs until it doesn't. See you Monday, one way or another. Keep your powder dry, trading family.